Hi, I'm Ian Weir, and I'm very excited to be here to share with you the journey we've undertaken at the Commonwealth in building out our portfolio management framework. I'm cognizant that most of you are not in the insurance industry, and many of you may not understand portfolio management in the context of an insurance company. But I hope that by the end of my presentation, I will have demonstrated the value of PRIZM segmentation in terms of communicating analysis in an easy to consume format. This is me. I have over 25 years of pricing and portfolio management experience in the insurance industry, both in life insurance and property and casualty insurance. A little bit about the Commonwealth. The Commonwell Mutual Insurance Group is Ontario's largest farm mutual. For over 100 years, the Commonwealth has been ensuring the lifestyle of those in smaller places and wide open spaces. Policyholders are members and have a say in shaping the company. The Commonwealth believes in the win-win scenario and invests a share of profits back in the communities we call home and where our members live. Commonwealth rates policies in auto, residential, commercial, and farm lines of business. We write over $200 million of premium each year. We only write business in Ontario, focusing primarily in Eastern Ontario, and our policies are sold through an independent broker distribution channel. The Commonwealth has grown significantly in the past 5 to 7 years, and I was brought in 2 years ago to build a portfolio management framework from scratch. I inherited a strong, talented team to work with in this endeavor. But what is portfolio management? In my mind, portfolio management is telling a story about the performance of the company. We have 4 lines of business: auto, residential, commercial, and farm. And the Commonwealth needs to understand how each is performing. Are we meeting premium targets? Are we profitable? Are there issues which are going to affect our long-term profitability? These are important questions. In portfolio management, we dig down below the high-level metrics and identify insights which provide additional context around our results. At the Commonwealth, our customers, our policyholders, are our members, and our members are at the forefront of every decision we take. As the Commonwealth grew larger, internally, there was a need to replace impression with how the company was performing with facts on how the company was performing. In short, the Commonwealth needed to be more of a data-driven decision-making company. So where do we start? Well, we need to drill down underneath our traditional high-level metrics to gain insights as to what was actually happening inside our portfolios. We had to drill down under annual written premium, loss ratio, which is a measure of our profitability, and retention ratio, which is the rate at which our members renew their policies. This would allow us to provide more context on our actual results, but also allow us to be more proactive in identifying and addressing any issues inside our portfolios. Commonwealth has historically been a very member-centric company and felt it had a handle on who our customer or members are. But we need to be able to quantify the characteristics of our members so that we'd be in a better position to respond to their wants and needs. Having a better handle on the characteristics of our members would allow us to gain a better understanding of the profitability of various member segments. Using the segmentation provided by the PRIZM model allowed us to gain better insight as to the performance of our portfolios and provide a data-driven understanding of who our members are. So what was the process? Well, we partnered with Environics and shared our insurance data on our members. This would include premium and claims, as well as other rating information. Environics combined our data with their own demographic data to create member segments. So basically, analysis using our insurance data on 100,000 members combined with Environics demographic data resulted in the 67 PRIZM segments being rolled into 10 member groups, and those 10 member groups being rolled into 2 member markets: core groups with pickups and pastures, rustic retirees, and secondary groups, affluent families, suburban startups. We now have the ability to truly identify our members. We replace the impression of who our member is with facts. The member groups give a picture of who our members are. It's easy to visualize a member in the pickups and pastures member group and compare that to a member in, for example, suburban startups. Segmenting our portfolio by member market allows for an ease in storytelling. Once we segmented our members into member markets, we analyzed the performance of our portfolio, and we found that core members were more profitable than their secondary counterparts. They also had a lower claims frequency and a higher retention. Most importantly, these results were consistent over time. Even since we performed this analysis, month over month, we consistently see these results. The Commonwell was new to portfolio management, and it was especially important that the analysis was easy to consume. The core versus secondary segmentation of our member was a very powerful lens through which to analyze our portfolios. The characteristics of the core member group were consistent with the overall impression of who our members are. Predominantly rural members in the pickups and pastures, rustic retirees. So that gave a sense of security and familiarity with the metrics as we presented them. It was intuitive to our stakeholders that core members would outperform secondary members. Analyzing our portfolio through the member lens provides additional context as to how the portfolio is actually performing. And I have examples of these later on in this presentation. We were able to quantify the profitability of our members by member market and identify opportunities to improve profitability across our portfolios. It's a common refrain and one that our CEO at Commonwealth often uses, is that simple is often very difficult to achieve. And I think building out the portfolio management framework is a daunting task, but by keeping it simple, I think we're very effective. And the PRIZM segmentation and the ability to segment our members into core versus secondary allowed us to tell a rather complicated story in an easy to consume fashion. Here's an example of a portfolio management dashboard that we created. And one thing that's interesting, and I'll just highlight, here's some of our high level metrics. So PIF is policies in force. So the number of policies that we've sold. This would be new business growth here. Retention is the rate at which our policies renew. The quality measures the whether or not we're retaining more profitable risks or less profitable risks. So if we retain more profitable risks than we're losing, we would be green, which is the case here for secondary. For core, we're having a bit of an issue this particular month, and same with farmers. But in general, we've seen consistent results. Here's our loss ratio, which is a measure of our profitability. So a lower loss ratio indicates a more profitable line of business or segment of business. When we look at the 3-year loss ratio, we see that farmers, who are actually part of the core, they're a subsegment of our core, is the most profitable, followed by core, followed by secondary. This is for September 2021. When we first started this, the gap between core and secondary was far more significant. And this is actually one of the results that one of the insights we provided, was that our secondary members were actually more favorably impacted by the results of the pandemic than our core members. And what I mean by that is particularly in the auto line of business. So with the pandemic being basically the last 18 months or so, which would be half of this 3-year loss ratio period, driving habits for core members who are predominantly rural were less impacted by the pandemic than secondary members. So we saw that secondary members had an improvement in their auto loss ratio because their driving patterns were more impacted. A urban member was more likely to be working from home, and thus their work commute, which might form a significant part of their driving patterns, was greatly reduced. So we saw an improvement in the auto loss ratio, which then closed this gap down here. It was an interesting observation that if we didn't have that core versus secondary lens, we may have missed out on. Couple of things here. Just want to, in terms of portfolio management framework, we analyze our businesses in three segments: new business coming into the portfolio, cancellations, which are exits, people canceling or lapsing their policies, and then the policies that renew. And again, we're taking a look at what's happening with respect to secondary versus core in each one of these elements. This predictive loss ratio is a portfolio management metric that we've created that has an independent view on the profitability of each member. So we don't require any other information than the characteristics that go into forming that metric to determine whether or not they're going to be profitable on a go-forward basis or not. Here we have a dashboard which breaks down the analysis into the member group. So here we can get a bit more granular and evaluate how each of these subgroups is performing relative to core versus secondary. We tend not to share this. We haven't shared this with the greater population in our company. We're focusing primarily on core versus secondary, but this speaks to the level of granularity that we want to move to when we see that we're getting the consistent results that we want to see. Here we've created our own member tiers where we take a look at the member segments, so core or the member markets, core and secondary, and then attach more granular level rating information by line of business. And then we take a look and we've identified members that are in the valued, opportunity, caution, and avoid, and we track our results in this space here. One thing that I want to point out is that in none of these slides have we mentioned whether they're auto, residential, farm, or commercial lines of business. We're able to analyze our data across all lines of business. So when we're looking at these dashboards here, we're really looking at the performance of the member and forces us to have a member-centric view on our portfolio. We still do take a look at the lines of business on their own, but this is probably the most important view that we have in terms of identifying whether or not our portfolios are performing well or not. This is an I think it's interesting dashboard here where we're evaluating our portfolio segments in terms of growth and profitability. So the size of these dots corresponds to the volume of business that we write in that particular segment. And we have ways of identifying those segments. So here we have, this would be a multi-line policy, meaning that they have more than one policy. They might have an auto and residential policy. It's a secondary member in the suburban startup. They're over 50. They've got driving records between 6 and 20. They experienced a rate increase in the most recent rate review, and they have a conviction, or at least one conviction. So here we see that the predictive loss ratio for this particular segment is up over 100%, which is not good. The profitable predictive loss ratio would be at 60%, so very unprofitable book of business, but it's shrinking. We can see that it's shrinking at about 7% or so. So that's not a horrible result, and the fact that it's shrinking is a good news story. And we can evaluate each one of these dots in that respect. This gives us a great way to communicate to our distribution partners when they're looking to write more business or to have conversation with our broker partners in terms of selling business. And it's an easy to tell story. We can say, yeah, we've got these suburban startups here, not profitable. Down here, we've got some core. These are down to earth people that we want to write. Soft landing for bad news. So earlier in the year, it was identified that we were not on track for meeting our planned premium. So we look at this table here, we can split it down by a line of business, and you can see what the difference is across each line of business, resulting in an overall missed to plan of $2.9 million. Without portfolio management, that's where the story ends. But when we took a look in portfolio management with our member lens, we're able to identify that when we built out the plan, we're actually ahead of plan for core members by 1.6 million, and we're behind by 4.5 million on the secondary. So the entire missed to plan is on secondary members. And when we're able to convey that to our to the executive, they can understand that the core member is more profitable and is more likely to retain versus a secondary member. So yes, we're missing our top line target, but not at the expense of our profitability. This table down here shows a view of growth rate. So before, you would have seen growth at about 18% overall in 2020 for auto, and about 7 or 8% for auto in 2021. But when we split it down between core and secondary, it's a very interesting story. So yes, growth has fallen off precipitously, and that was partially by design. We implemented a rate change, a rate increase in 2021. The rate increase was shifted more heavily on secondary members. So here we can see that growth shrunk, went down from 20% in 2020 down to 5.1% in 2021, whereas the drop off for core was from 17.3 down to 9.7. More interesting is that the core is now growing faster than the secondary. So we're improving our mix of business, especially when we compare it to the rates of growth expressed in 2020. Here we monitor the performance of our rate change. So I mentioned that we implemented a rate increase for auto. Here we can see that for the volume of new business that we projected, we're behind overall across each of the member markets, but we're behind most on the secondary. So again, secondary being less profitable, we're not quite as concerned about missing our growth target in the secondary market. Similarly, here we see that renewals are up, but renewals are way up for our core members and our farmers relative to secondary. Again, that's a sign of improving our mix of business. Portfolio analysis involves a great deal of data and, quite frankly, numbers, and not all stakeholders are necessarily comfortable in that world. But it is crucial for all stakeholders to understand the insights provided by the analysis. The PRIZM segments allowed us to communicate results and insights to our stakeholders in a form that was easy to consume. The member markets created from the PRIZM segments provide a lens into our portfolio analysis, which is member-centric. It's not necessarily dependent on the line of business, which is the traditional format of portfolio management. In essence, all we need to identify whether a potential member is core or secondary is their postal code. Combining postal code with just a few other rating characteristics, for example, line of business, whether or not it's a multi-line policy or not, we can get a very accurate view as to the potential profitability of a broker portfolio up for rollover. So for any type of acquisition, we require very few points of data to determine whether or not that's a potentially profitable book of business for us or not. So, we're still evolving our portfolio management framework at Commonwell, but what's next? One of the things that we're contemplating is there an intrinsic difference between core and secondary members? What does the member market contribute to the loss cost equation? An example would be if a core member living in a rural area dents the fender of their pickup truck, they're more likely to say, oh, it's the a badge of honor and drive around town with this dented pickup truck, not a problem. But a secondary member in an urban setting is much more likely to have that dent repaired. So it's these types of anecdotes that we're trying to confirm when we perform our analysis using the member market lens. In terms of use of the PRIZM segmentation data and information, we're contemplating whether we can include member segmentation directly into the rating structure. So are there elements from the PRIZM segmentation model that we can directly program into our rate structure? We're always looking to include other sources of data, but then when we contemplate those sources of data, what does it look like when we overlay the member segmentation from PRIZM segmentation on top of that? And then, of course, we're also investigating whether there's other Environics databases that we can use to further enhance our member segmentation. I'd like to take some time to thank my team who has built out our portfolio management framework at Commonwell. Zach, Sajini, Jackie, Lori, Shannon, and Mike, thanks so much for all of your work over the past 2 years. You've done an outstanding job. And I'd like to thank all of you for your time today, and I invite you to join me in the next session for questions. Thank you.